Hey everyone, welcome to today's Explainer. It's May 10th, 2026, and man, we are jumping right into a super fascinating dynamic playing out in the market today. We're going to focus on a deep, sometimes painful, but honestly completely necessary structural cleansing that's happening right beneath the surface of the crypto industry. It's a wild story of legal battles, legacy shutdowns, and some pretty deep-seated fears. So you really have to ask yourself, is the crypto market actually as healthy as it looks? Think of the current market kind of like an iceberg. From a distance, that tip of the iceberg, the headline numbers, looks incredibly healthy, just gleaming in the sunlight. But if you take a dive below the waterline, well, the subsurface reality tells a totally different story, one of stress, friction, and forced evolution. Because look, strictly on the surface, things are fantastic. Bitcoin recently surged past $78,000, hovering right around what analysts call the true market mean. And this top-line momentum, it's been heavily fueled by macroeconomic tailwinds and this sudden wave of geopolitical relief, specifically the reopening of the Strait of Hormuz, which really eased global market anxieties. The charts look undeniably good. But beneath that shiny surface, Web3 is undergoing a massive, brutal stress test. We're calling this the cleansing phase. We're going to be looking at stablecoin legal battles, legacy NFT platform closures, identity verification upgrades, and some deep-seated technical FUD. All right, Section 1. Stablecoins face legal reality, the fight over digital dollars. Let's get into it. We are literally witnessing an existential clash for the whole industry right now. On one side, you've got crypto's founding ethos, right? Censorship resistance, the idea that nobody should be able to freeze your money. But on the other side, you have the traditional finance reality, which is legal liability. If a stablecoin issuer has the technical ability to freeze stolen funds, but they just choose not to, are they legally responsible for that? To really understand the stakes here, we have to look at the massive $280 million exploit on the Drift protocol. This catastrophic hack is the absolute flashpoint. It triggered this huge industry-wide debate over who actually gets to freeze your digital dollars and when. It's wild because the two biggest players reacted to this exact same event in completely different ways. Circle is now facing a class action lawsuit filed by the Gibbs-Murray Law Group, specifically alleging that they failed to take action to freeze those stolen funds. But then you look at Tether, and they took a highly proactive approach. They stepped right in with a support and rescue plan worth over $127.5 million. It's just a stark contrast in philosophy and technical control. The legal outcome here is going to completely reshape the stablecoin landscape. But this cleansing isn't just about legal liability, it's also about market viability, because we are seeing the legacy landscape dramatically shrink in real time. Which brings us to Section 2, the legacy NFT shakeout, the end of an era. $230 million. That number represents the sheer historical weight of the Foundation NFT marketplace. Since 2021, this platform processed an absolutely staggering $230 million in primary sales. I mean, they were an absolute titan of the digital art world during the peak of the NFT boom. But as we're seeing, past volume doesn't guarantee future survival. Following a failed acquisition by Black Dove early in 2026, Foundation has officially and permanently ceased operations. It's a brutal reality check, honestly. The ongoing NFT shakeout is just merciless. It's cleaning out infrastructure that simply cannot sustain itself in today's market environment. Okay, Section 3, combating the AI deepfakes, real-world identity on the blockchain. Moving from the shakeout of the old to the urgent necessity of the new, we hit this crazy intersection of artificial intelligence, Web3, and human identity. The core of Sam Altman's recently upgraded World project, formerly WorldCoin, is proof of human. It's a real-time verification system designed specifically to combat AI-driven deepfakes and bots. In an age where generative AI can perfectly mimic a voice or a face, we desperately need a cryptographic defense mechanism to give us undeniable, real-time confirmation that the entity on the other side of the screen is an actual biological human being. And this isn't just a niche crypto experiment anymore. World is actively rolling this verification out through mainstream partnerships that we all use every day: Zoom, Tinder, DocuSign. We are literally seeing Web3 identity verification bleeding directly into our everyday Web2 lives to solve a very real, very modern problem. All right, Section 4, the Satoshi override mystery, unpacking the quantum FUD. So we need to talk about the deep-seated technical anxieties that are currently weighing heavily on retail market sentiment. Listen to this quote from Cardano founder Charles Hoskinson. Bitcoin's quantum fix is a hard fork in disguise that cannot rescue Satoshi's coins. He's talking about a proposed Bitcoin update, BIP 361, designed to protect the network from future quantum computers. But the narrative spreading like wildfire online right now is that this fix acts as a hidden back door that leaves the oldest coins completely vulnerable. And we aren't just talking about a few loose coins here. This debate directly impacts roughly 1.7 million pre-2013 Bitcoin. Crucially, this includes the massive, untouched holdings of Bitcoin's anonymous creator, Satoshi Nakamoto. The fear is that these specific coins remain vulnerable to quantum theft, or even worse, are being deliberately frozen out. Now, let's be objective here for a second. Technical experts overwhelmingly dismiss these rumors of a Satoshi override key or a hidden backdoor as a complete misunderstanding of how the early network features actually work. But you know how it is in markets. Perception is reality. The narrative alone, regardless of its technical accuracy, is enough to cause significant psychological drag and really temper retail enthusiasm right now. Which perfectly segues into our final section, Section 5, Searching for the Bottom, Navigating Extreme Volatility. Let's bring all these subsurface structural factors back to the overarching market impact. What are the indicators actually showing us today amidst all this noise? Well, we're getting some wildly contradictory signals. On one hand, the highly respected CVDD indicator, which has historically called every major floor since 2015, is flashing a deep correction bottom signal below $50,000. Add to that the recent reports that the Ethereum Foundation, despite recently staking 70,000 ETH, is still actively selling ETH to fund operations. That's significantly capping prices below $2,400 and fueling this persistent sell pressure narrative. But then, on the exact opposite side, you have highly optimistic analyst targets eyeing $125,000, fueled by macro events. But the crucial point is this. The market is currently stuck with the Fear and Greed Index sitting at just 21. That is extreme fear. We simply lack the retail FOMO needed to break through. And sitting right above Bitcoin's current price is a massive, looming $450 million sell wall. Without that retail momentum, chewing through that wall is going to be incredibly difficult. So what should you take away from all this? Watch the $74,000 level closely as the primary line of defense, and definitely pay attention to the stablecoin space. If those legal pressures on centralized entities like Circle intensify due to that Drift lawsuit, we could see a massive rotation of capital into decentralized alternatives or private credit-backed stablecoins. Investors are going to prioritize censorship resistance over assets that can be legally intervened with. Which leaves us with the ultimate question for this explainer. The industry is clearly clearing out the deadwood, stress testing its code, and finding out exactly what happens when code meets the courtroom. So, as crypto cleans up its infrastructure, will its foundational principle of decentralization actually survive the harsh light of legal reality? It's the most important story in the market right now, and one we are going to keep closely monitoring. Thanks so much for joining me on this deep dive.